Meta closing out 2025 with an 11th hour acquisition. Got a few of those in the tech space this week. The company announcing it is buying Manus, a startup founded in China that builds AI agents. MacKenzie Sigalos has more in today's Tech Check segment, Mac. And it's interesting to see Meta outperforming, too.
Yeah, it is. Investors are bullish on this. And part of that is the fact that it's a deal that speaks directly to the pressure Meta CEO Mark Zuckerberg is facing to show returns on the company's massive AI spending, and one that straddles the increasingly complicated U.S.-China AI rivalry. So Manus had a mini viral moment back in March. The company claimed that it outperformed OpenAI's deep research. People were calling it China's next DeepSeek moment. The K-Web was running up while the Mag 7 was selling off. Now those trades have reversed. But the talent and tech that spooked investors this spring, that's now inside of a U.S. tech giant. No terms officially disclosed, but the deal reportedly values Manus at more than $2 billion, a big jump from the $500 million valuation when they raised this spring. One analyst saying this deal has the makings of a future Instagram or WhatsApp-style home run, adding that agentic AI plugs right into Meta's push to monetize SMB business tools, especially the services that it offers internationally via WhatsApp. And from Silicon Valley, the read on why Meta paid up is blunt. One VC telling me that Meta has no real AI products with traction. Manus, on the other hand, is a strong business, $125 million in annualized revenue by December, gaining 20% plus month over month, but struggling to grow into something that could really IPO. So this is Meta buying one of the only viable consumer AI app successes out there. Meta says Manus will stay standalone for now, but the product will also get woven into its products over time. It is a big integration test for Chief AI Officer Alex Wang, coming after 4 reorgs of his department in 6 months as CEO Mark Zuckerberg races to make the spend pay off. Guys?
Yeah, and Alex, a product of a deal himself, of course, what they paid $14 billion for part of Scale AI, although that company's kind of what was left of it is sort of no longer. I mean, are there more to come here, do we think? And, do we have a sense in terms of how, this company's growing so fast, MacKenzie, I do wonder the impact it could have pretty quickly.
Well, to your earlier point, you spoke to Gil Loria earlier about the fact that Meta has spent $30 billion on a mix of talent acquisitions, 14 of that, as you just noted, to bring Alex in-house. And we're still waiting to see return on that. But Zuckerberg has the voting power to be able to make those kinds of decisions. So as for whether more are coming, certainly, yes. There's not been any sort of, in the last week alone, we've seen 3 more deals from SoftBank, from NVIDIA, really leaning into the fact that these acqui-hires are not being checked. And so in that kind of regulatory environment, why not lean in? And at roughly $2 billion, it's not even that big a purchase. And their SMB enterprise services are $10 billion annualized. And so if you can soup that up with an agentic AI offering, that's a really strong product to bolt on.
It also just it increases the concentration risk, which I just keep saying. But as these, as the big powerful ones get even bigger, even with these smaller acquisitions in the AI space, it creates a level of vulnerability ultimately for the market if we do see unraveling like we saw little flashes of this year.
And when you think about that Mag 7 contingent, you've got Elon Musk, Jensen Huang, and then, of course, Mark Zuckerberg, which are these founder-led companies where they do have the voting share to be able to make these kinds of decisions without answering to a board of directors. So certainly you are seeing some consolidation. Just in the last week, as I mentioned, NVIDIA buying Grok, a smaller AI chip company that gives them a real advantage in the memory space, which has been one of the hottest performing stock sectors in 2025.
Yeah. As you point out, of course, Zuckerberg, 61%, I think, of the vote, lets him do what he wants. By the way, shareholders applauding it. The increase in market cap is some $18 billion today for $2 billion that's been spent. MacKenzie, thank you.